Welcome to the Real Estate Syndication Show. Whether you are a seasoned investor or building a new real estate business, this is the show for you. Whitney Sewell talks to top experts in the business. Our goal is to help you master real estate syndication. And now your host, Whitney Sewell.
This is your daily real estate syndication show. I'm your host, Whitney Sewell. Today, our guest is Eric Johnson. Thanks for being on the show, Eric.
Hey, Whitney. Thanks for having me. Good morning.
Eric operates Shoreside Realty Finance, a lending company dedicated to working with investors day in and day out to provide streamlined finance services and emphasizes execution and integrity. Eric is also an active investor in the Chicago market. Shoreside's mission is to help investors achieve efficient and effective growth by delivering reliable financing solutions that are tailored to their investment strategy. Eric, welcome again to the show. I'm grateful to have you on. Lending, the finance piece of any, usually commercial or almost any real estate deal is so crucial, and how we do that, who that lender is, and that relationship. So many deals are made or killed by the type of debt, that we get, or by the lender we're working with. And so I'm looking forward to the conversation. Give us a little more about, who you are, Eric, and Shoreside Realty and Finance, and let's dive in.
Yeah, absolutely. Again, great to be on the show. So, and just kind of what you just said is so true. Many deals can be killed based on how you source your debt, or the relationships, or just really the communication of who your lending partner is. It's just every piece is so important. But really, I mean, for my own personal backstory, I got started in investing actually in Los Angeles. I lived there for about 4.5 years, and that was tough. it was actually with fix and flips. So that's kind of where my story began. I teamed up with a couple investors out there and did acquisitions for them. Actually, that's kind of how I got into investing, and I guess flips was something that I was interested in the beginning. And then I kind of found my niche in finance shortly thereafter, and I've been doing that and helping investors, pretty much just with how they grow their portfolio and how they actually, analyze deals, and kind of helping them through the process. And that's really, what it's all about. So,
nice.
It's yeah, absolutely.
Yeah, for sure. Well, so that's awesome. You have the real estate background, or you were doing flipping, and then it's kind of evolved into this lending business and what you're doing now. So let's just jump right in. I know many of the listeners, debt is something is difficult to figure out sometimes, and there's different options, and what do we need? What's the best option? So why don't we talk a little bit about just debt strategies and just how they align with different types of investment niches?
Yeah, absolutely. So I will try to make this super concise and just super digestible. If we're just talking in investor financing here, I mean, let's look at the main strategies, right? You have fix and refi, or we fix, refi, and hold, which is essentially BRRRR, right? And then you also have 5+. So 5+ units, or multifamily. And at that point, it's a different game in terms of the debt. So let's tackle the fix and sell and fix and hold, since that's probably what 90% of investors are doing, right? On 1 to 4 unit property. That's the asset. So for fix and sell, right, you have essentially fix and flip loans, right? That's short-term bridge lending. That's a percentage of the acquisition, and you get your construction, right? That's what enables you to do deals. And then whether you external investors for the equity piece is kind of it's a non-factor, but that's where the debt is coming from, right? So if you're an investor who wants to flip, that's what it is. It's a probably 12-month bridge loan, 80% acquisition, 100% construction, and then that's what keeps your business rolling from a debt perspective. For a fix and refi, so for a BRRRR deal, you're going to have 2 pieces. And this is why it's a little more complicated than just a fix and flip, because a fix and flip only has one debt, what I call stage, right? For any deal that has a refi, you have 2 debt stages, right? You have the initial front end, which is the acquisition, which will still be a bridge loan, right? Because you still need to fix the property. And on the refi side, now you need to make sure that your LTVs line up with your payoff and the market value of the property, right? So on the refi side, you're going to be looking at probably, if you're an investor who can't go conventional, probably an asset-based commercial loan, right? Based on the debt coverage ratio of the property. And that's going to be the two debt stages for BRRRR deals. And I advise investors keep your ARV or keep your payoff to 70% of your ARV. Some people push it to 75. I don't usually like to advise on 75 just because it can be tougher. It can eliminate some of your options, especially with a situation like COVID. If a shift in the marketplace happens, you want to make sure you're protected. But roughly that's kind of, if you're a smaller investor on 1 to 4 unit properties, those are your kind of your end games for debt.
Yeah.
Just a very brief overview. Yeah.
Yeah, and I think most of the listeners are going to be doing that. The 5 units or more, they're going to be in larger commercial real estate, and looking for, obviously the agency debt or bridge debt for larger properties or different things like that. What about just as they are looking for debt right now, just with COVID and everything that's happened, could you just speak to that listener right now who's trying to get into to the syndication business? They're looking for debt. What are their challenges going to be right now in the current market with COVID, everything that's happening?
Yeah, absolutely. If you're a syndicator, if you're experienced or syndicator listening, there's a lot of moving parts right now. One is leverage in the marketplace has significantly decreased because secondary market investors are really skittish and therefore reducing liquidity in the secondary market. So where those dollars were really flowing, pre-COVID, they're not. It really, even Freddie and Fannie are at 75, and they were 80% all day, before COVID. So you need to be careful on what leverage you're anticipating. And then the second part is how you're structuring your deals from an investor standpoint, and making sure that that's clear, especially in a saturated like this. I know a lot of my clients they're not winning deals. They're submitting offers and there's just 4 other offers on the property, especially for multifamily. And so going back to the entity structure, making sure you have all of your LPs and external investors in line, making sure that deal structure is clear from the beginning, so there's no time wasted, because depending on that structure and how you set up your entity and how you set up your investors within that entity, usually single asset entity, then it'll play into the underwriting of the deal, and you may need to switch some things. That's why it's the best idea to get it sorted out at the beginning. And I see a lot of syndicators run into that issue where they're scrambling, trying to figure out their LP or their investor structure, just because there's some things that came up in the process, which is normal. But I mean, that's why you need to stay flexible.
So let's talk about those a little bit. You talked about how leverage has decreased, and how Freddie and Fannie are now at 75%. What will that typically do to a deal? Is that going to kill, most deals? How do you see that on the lending side? What are those barriers, and how do we overcome them?
Yeah, so I wouldn't say the 5% knack in leverage is in and of itself a deal killer, right? Because you can still just raise that 5% equity. Like that's not a big issue. Really, the issue is even on agency debt right now, there's COVID reserves, right? So that's the big thing. So before, obviously pre-COVID, there was no such thing as COVID reserves. Usually, you have your net worth, your liquidity requirements, but right now they're actually having, sponsors escrow maybe 6 months of P&I in addition to cash to close. So the borrowers are coming in with pretty much, more equity. And in some cases it can be 9 months. And I know as of a couple months ago, it was PITI as well, 6 months PITI. And then some people are like, well, depending on the size of the deal, right? If it's a large loan amount, that could be a decent sum of money. So, people, sponsors were kind of backing off, and they're like, oh, this deal is not too good. But So they kind of pulled the plug. But as far as rates go, I mean, obviously great rates, but it's just, getting over those reserve requirements. So that's really another key thing, that if you're a syndicator in this market and you want to do deals, just expect some kind of additional liquidity, or reserve requirements, yeah, on top of everything.
What's been the process, or what you've seen up to this point, of getting those reserves back?
Yeah, so really, it's going to be, the agencies are essentially holding that in an escrow account, right? And when the from what I information that they've put out, actually publicly, is, there when the COVID reserves kind of back off, the borrowers, the sponsors, are going to have to request those funds back. So if it was a COVID specific escrow account or requirements, of for the loan in the loan docs at funding, when those are backed off in the future, whenever that is, then the sponsors are going to have to go back and essentially reach out and say, hey, this is, my property is operating at 95% occupancy. We're good. The COVID guidelines have backed off. I would like to request my funds back from this specific account. And that's usually how you would do it. That's the most direct way.
Okay, so we got to go. We got to request that. And I like how you mentioned there, present ourselves well. This is the property's operating this well. This is what's happened over the last year. This is our occupancy. All those things, so we can just bolster why they should refund the reserves, right, or give those back to us, so we can use those or distribute them back out to investors as well, if it's if we didn't need that at the moment. And so, you talked also about like structuring, the importance of structuring the deal correctly and clear from the beginning. Could you elaborate on that? What does that mean exactly to the lender, as far as, structuring it clear from the beginning?
Yeah, it's going to depend on which program, I guess the asset or the deal falls into, right? Because obviously, if you're going to go, something like agency versus CMBS, CMBS is a little more lax, I guess is the right word, right? And that's usually the tier below, something like agency. Agency is going to be more strict. You're going to have to follow, all, what they require, and usually it's a single asset entity, and if you have outside, you usually have an LLC just for holding the investors, right? So you don't usually put yourself in, as a member of the LLC, and then slap in your 20 investors, as members. You usually have, one LLC that's maybe you and you and another general partner, and then you have another LLC in which all of the other LPs are in, and then the LLC that you and your other general partner are in own, that it's contained within the LP LLC is contained within the GP LLC, so to say, which is but the GP LLC is the title holder. So that's generally a clean, acceptable way to do it. Obviously, it's going to depend, but that's a pretty clean way to just keep everything nice and in its own separate domain, so to say. So there's no crossover confusion.
What are a couple ways that you've seen people get creative with lending to just help explode their growth?
Yeah, so really value add, right? So syndicators are all about value add. So in my experience in funding these deals, really it's going after bridge debt at the beginning. So if the sponsor really identifies a good value add asset and there's a lot of potential for upside, you can definitely come in with a bridge loan at 75 LTV and maybe 100% construction, right? So it's essentially going to be like a BRRRR. It's going to be like a BRRRR deal, but for multifamily, if you want to think of it like that, right? You're essentially fixing it, rehabbing it, stabilizing it, and refinancing. So if you're a syndicator listening to this, if you can really use bridge debt creatively in addition to an equity raise, right? And by putting those two together, you can really come into a deal very strong. And by the time that you fix up the property and hopefully underwrite conservatively, you still have a lot of upside to capture. But once the property is, stabilized, once you refi and hold it, you should be able to capitalize on, even a cash out refi, and, disperse some of that equity back, and obviously lower your rate and get better terms on it. So, but again, on the value add side, still going to be, probably a 12 to 24 month bridge loan, depending on how big the project is, right? If it's a 50 unit building and needs, $1 million in, CapEx, then, we'll probably shoot for a 24-month initial plus, some 6-month extensions here and there. So,
Eric, what's the hardest part of this lending process or working with, a commercial investor, a syndicator?
yes, I mean, really, it's just about the documents. I gotta say that, it's the delay between, me getting the documents and me submitting it is pretty much zero, right? I submit it like it's within the hour. But if people are taking, an hour to get, or sorry, a week to get documents back to me, that are critical, and I mentioned that in the beginning, it makes the process way more difficult than it ever needs to be. Because as I look at it, if something goes wrong and we wasted a week in the beginning, we don't have that week on the back end when something actually does go wrong. So I want to make that very, very clear, especially with large transactions like this, because when you get the appraisal back, that's when the box kind of opens up, so to say, of potential issues to deal with. So for any syndicator listening, don't lag behind on investor docs or anything else, because it just makes the deal much more stressful than it needs to be, because now everyone's anxious about the timelines and the contract and losing EMD and all this. So.
Nice. No, I appreciate you elaborating on that, or just hammering that home a little bit. No doubt about it. You want to be as prompt as possible through the entire process, because you need that extra week sometimes, right?
No, absolutely.
So how do you like to see operators preparing for a downturn when they're presenting themselves, for a loan or for debt?
Yeah. So it's going to be, I mean, as far as, a deal package, so to say, or a pitch, to for either potential investors or for debt, you want to really make sure you showcase the asset and business plan is, right. So you have the entrance, the execution, and the exit. Those are the 3 stages. If you can't give me every detail about those, then it's, there's probably something, a gap in your model or something that's missing. As far as just screening debt, it's pretty easy, getting in an offering memorandum, 2 years income statements, current rent roll. And then if it's a value add deal, please explain what that value add is, what the NOI is going to be, and then, what the as stabilized value is going to be, given area cap rates, or what you estimate to be your cap rate and on your exit, whether it be in 3 or 5 years or what. But if you have those basic documents, it's pretty easy to, come and say, hey, is this something is this a deal you guys are interested in? This is a value add, 50 unit in blah, 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 here are the docs. And at that point, it's pretty easy to screen.
What do you predict, Eric, is going to happen in the real estate market over the next 6 to 12 months?
We're expecting a pretty positive outlook for Q1 of 2021. So we're hoping that some of these COVID reserves and other overlays are going to be kind of coming back. I mean, even here in Q20, we've seen a resurgence in some liquidity, which has restored some LTVs. Traditionally, a lot of people in the middle of COVID were at 70. Now we're kind of at 70, across the board on strong deals. So, I'm hoping that some of these COVID overlays will kind of, get taken back, because they've been on there for a good amount of time, and it's made a lot of purchase deals maybe a little on the unattractive side. Refinance is a little easier, right? Because you don't need that extra, or the reserves comes from the existing equity, right? So it's not out of the sponsor's pocket, so to say, and they're still getting a reduced rate. But purchases are a little hard to navigate. So I'm hoping that those become easier in the next 12 months for sure.
Do you have a couple of daily habits that you're disciplined about that have helped you achieve success?
I'm pretty disciplined about diet and creative time. So, in a non-business way, right? You kind of have to take care of your whole self before you can really go into business. So I'm pretty strict about, not eating, unhealthy, foods. I do like sugar, but, I always keep it, in the healthy way, just because it keeps me energized. And that's really what it comes down to. If you don't have energy, how are you going to do, conference calls and emails and figuring out deals, negotiations, and all that. You got to feel good. So I always put my health first.
Yeah. What's that saying? The unhealthy man has one wish. The healthy man has many wishes. The unhealthy man has one wish. So couldn't agree with more. Yeah, health is so important, and one big way you do that is what you put in your mouth. But so is there a way you've recently improved your business, Eric, that we could also apply to ours?
Yeah. So, in terms of our lending programs, we've reduced pricing and rates across the board for our 700 plus, FICO borrowers on the 1 to 4 unit side, and actually some reserve requirements, as I mentioned in the beginning, they went from about 9 months to about 6 months. And in some cases maybe can get some exceptions, depends on sponsor strength. And so those reserve requirements have gone down. So, it's very slow progress. It's kind of like this whole year has been, since the outlook of COVID has kind of, tapered a little bit. The finance sector has been kind of this slow creep, and I'm hoping for a more exponential growth, or restoration next year. So,
what's the number one thing that's contributed to your success?
I would say daily actions, albeit no matter how small. So I've always made it a thing. I was always a gung ho kind of person in the beginning, where I wanted to do all these big things in one day, and slowly I figured out that wasn't really sustainable. Maybe once or so every week, or maybe if you have some emergencies, you got to put in some burn hours, but really just keeping it balanced and being self-aware of your own balance and just taking consistent actions, right? If you're a new syndicator, what do those daily consistent, actions look like for you, right? Is it talking to one broker every day? If you talk to one broker every day for 30 days, you have 30 new contacts. And one call a day isn't too hard, right? But that can add up. And so if you just stick to little stuff, and the best part about that is if you do one thing, your brain's going to say, hey, I can do this, and you're going to want to do more. So that's what I would say.
No, that is great advice. I appreciate you sharing that. Just the consistency is what's so important. And you just laid it out there very simply, which is amazing. Just the daily actions. And like I said, one call a day, even if you're working full time and have all kinds of things going on, I bet during your lunch hour, you can make one call a day, right? And get the ball rolling
just
in many directions. So, what about, how do you like to give back?
Yeah, SRF it's a service, business. We're a direct, lending platform, but really, investors come to me with questions like all day, right? And I'm not an attorney, so I don't shortchange them on information in exchange for, dollar bills. But if you come, if an investor comes to me and says, hey, this is what I want to do, this is my model, how do I do it? And I will say, here is what you need. You need 1, 2, 3, 4, ABC. If you have these things, come back to me and we can get a deal done, or, at least I can put you in the right direction to get a deal done. And that's really what it's all about. Right. And again, I'm not here to shortchange people on withholding information, because there's just a lot to navigate in the commercial finance world. So, when investors come to me, I lay it out for them based on their strategy, and I'm honest and upfront. I'm saying, hey, if you don't have liquidity, this is what you need to do. This is where you need to be. If you don't have this money, you need to find a way to get this money to do these deals.
So true. And it's so important in our business, in any real estate business. We have somebody like yourself that we can reach out to and ask questions of and say, what about this type of property, or what, this scenario, what do I need to do to make it happen? And that you're, at least one of those calls monthly that we're probably reaching out to. And so Eric, how can people get in touch with you and learn more about you?
Yeah. So my website is shoresidefinance.com. So www.shoresidefinance.com. And I love when people email me. My email is open to investors. My email is Eric, ERIC, finance.com. So if you have scenario or just question about your investment model, that's by far the best way to reach me, and I'm super responsive. So
Thank you for listening to the Real Estate Syndication Show, brought to you by LifeBridge Capital. LifeBridge Capital works with investors nationwide to invest in real estate, while also donating 50% of its profits to assist parents who are committing to adoption. LifeBridge Capital, making a difference, one investor and one child at a time. Connect online at www.lifebridgecapital.com for free material and videos to further your success.